So you own a home and you're ready for an upgrade. But the money you need is locked in the equity of your current place. Maybe you don't have $30,000 to $50,000 just sitting in your bank account for a deposit that's required to buy the next place. There's a solution for that, and it's called a deposit loan. Hey everyone, it's Courtney Rufh, and today we're talking about a problem a lot of homeowners run into. You want to upgrade into your next home, but all of your money is tied up in your current one. Deposit loans are a great solution for people who are trying to make that next move, but their cash just isn't liquid. Well, you're probably thinking, Courtney, if I sell my house, doesn't that mean that I have money to buy the next place? Well, let me give you a real life example of how this all works. I had clients selling a small studio apartment, under 500 square feet, no bedroom, everything kind of in one living space. They wanted to move into a proper one-bedroom condo. They had equity in their current place. In today's market, they could sell it for a higher price. But they had no extra cash, not even enough for a 5% deposit they needed to lock in on a purchase. So here's what we did. We listed their home. Once they got an offer, that went firm, meaning subjects were removed by that buyer. Their mortgage broker applied for a $20,000 deposit loan because that was the amount required for 5% on their purchase. Then when their sale completed, part of their sale proceeds paid off that deposit loan plus the small interest fee that was required. It's kind of like a cash advance. So everything lined up perfectly. Sell, buy, move once. Smooth domino effect. And I'll quickly explain this for those who don't really know what I'm talking about. So when you sell your home, usually closing dates are anywhere from 4 to 6 weeks. That's pretty average, meaning when you sell, the buyer on your property firms up, they put forward a deposit, which is then held in trust with their realtor's brokerage until completion. Completion is usually 4 to 6 weeks out from that time frame. You're still living in that property up until completion. And usually completion is then followed by the possession date, and the buyers, which will now be the new owners, move in. So there's a gap from when you actually sell it to when you actually get those sale proceeds. So in that time frame, you don't have that money yet. So how are you supposed to look for a new property to move into and hopefully line up the possession date for when you need to be out of your place? That is what gets a little bit confused with people, is that, oh, I sold my place. But no, you don't get the money the moment the buyer fulfills their conditions. Everything's held in trust. And then the completion date is when the money changes hands, title transfers, etc. So you kind of, in an ideal world, want your sale and your purchase to have closing dates that fall one after the other. Your completion date for your sale, then the completion date for your purchase. So you receive the money for your sale proceeds. The next day, those proceeds go towards your purchase. The day after that, you move into your new home. And the day after that, buyers get possession of your old home. That way, you don't have to move twice, stay somewhere, put your stuff in storage. Everything coincides beautifully. And that is a perfect world scenario. And this is how deposit loans really shine. So before we go any deeper, let's clarify. The deposit is not the same as a down payment. The deposit is usually 5% of the purchase price, and it's paid after your offer is accepted, typically when you remove subjects, also known as fulfilling your conditions on that home. It shows the seller that you're serious, and it locks in the deal. Most people use their sale proceeds to cover the costs. But what if your sale hasn't completed yet, or you're trying to have your purchase and sale dates coincide with one another so you don't have to move twice, which is that ideal situation that I mentioned previously. Or worse, what if you haven't even listed your home yet? In a market where homes aren't necessarily flying off the shelf, you definitely want to have it listed first because you just don't know what's going to happen, and you need to make sure you have the right amount of funds prepared for your home purchase. So that's when a deposit loan comes in. It's a short-term loan from a lender or mortgage broker that gives you the deposit up front, secured against the equity in your current home. It's basically like a cash advance. You need cash right now, you don't have it, but you need to use it for your purchase. You pay it back when your home sells and completes. Some lenders call it a bridge deposit loan or a deposit insurance. We know them as deposit loans. So how does this all work? Number one, get pre-approved for your next purchase. Super important so you know that you qualify for the next purchase. Number two, your home must have a firm offer. No subjects remaining. The buyer on your home has satisfied all of their conditions. They've paid their deposit in trust. Number three, Your mortgage broker applies for that deposit loan, which again is typically 5% of the purchase price of the next place. Once you're ready to remove subjects on the home you're buying, meaning you'll have to present that deposit, the lender releases the deposit funds, often directly to the buyer's lawyer. Number 5, your current home completes. Part of your sale proceeds will repay that deposit loan, plus any of the interest and fees associated with borrowing that deposit. Another example, so let's say you're buying a $900,000 home. The deposit needed for that, 5%, which is $45,000. You only have about $5,000 in the bank that you can use towards the deposit, so your mortgage broker arranges a $40,000 deposit loan. After your current home completes, that $40,000 gets paid back, plus the interest on it, which is usually only for a few weeks, but sometimes it can be a few months depending on how long the closing is. So you're borrowing that deposit loan and you don't get the sale proceeds until, 2 months from then. You're going to be paying interest all the way up until that point. So why deposit loans are amazing for people that are in these positions. A, you don't lose out on a home that you love because you have to wait for your sale proceeds before you can go out shopping. B, you don't need to borrow from family or drain your investments. C, it lets you buy and sell with matching dates, 1 move, not 2. And what to keep in mind, you must obviously qualify financially. So your income, credit, equity, make sure you can actually go into that next home. There is a fee to pay in order to borrow for this deposit. Obviously, money isn't free to borrow, which makes sense. And you need a firm sale in order to initiate the request. So you can't just be on the market and not have a firm sale on it or any offers. You have to have that offer in place. That way the bank knows they're for sure getting this money back because your home sale is firm. So if you're a homeowner wanting to move, but all your money is tied up in your current place, you do have options. A deposit loan can bridge that gap and make the process way less stressful. I hope that all made sense. And just know, while selling your current home, there is a way to advance some cash in order to purchase the next place. So if you're wondering whether you qualify or want help planning your move, send me a message. I'm happy to walk you through it or even connect you with a great mortgage broker. If you enjoyed this video and found it helpful, please give it a like, maybe even a subscribe, and leave your questions in the comments. Thanks for watching, and I will see you in the next one.